Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield. To say that even a Friday trade was a crazy long week, I think this entire week in itself was like a month of trading with such ebbs and flows that we saw within the market trade. We're going to talk about the algos and how much of an influence did they have on this cattle complex this week. We'll look at the macros, the weather, the acreage numbers. We'll also talk about equity markets and a lot more crammed into the next little bit. So stick around. We've got a lot more coming up.
Meet the champions of innovation in the heart of Nebraska. They're not just farmers, and they nurture more than just crops, pushing boundaries and turning challenges into opportunities. They trade knowledge and know-how, and their dedication doesn't end at harvest. It's in your every bite and every drive. The future of food, fuel, and fiber, and the future of Nebraska starts right here.
Welcome back as we continue today's program. We've got two great guys joining us, which are going to bring an insight as to what we saw in this market trade. Kyle Bumsted joins us and Darin Fessler, Darin with Lakefront Futures. And gentlemen, it was a crazy week. And I want to kind of start out there as we kind of look back. What was your one takeaway from the week that seemed to catch your attention in the markets? Darin, I'll start with you.
Yeah, it's a little bit outside of the ag space. I mean, we've seen a lot of volatility in the equities, and I think that has a little bit of the volatility cranked up here as we end the week in the ag space as well. A lot of volatility intraday in these S&Ps, and you have the job number out here today. I think there's a lot of concern in just the U.S. economy. Not just that, you've seen the largest decline in the Nikkei in Japan since 1987. You got to watch this very closely. And what really does that mean for the field and cattle?
All right, Kyle, what about for you? What was your biggest takeaway?
Biggest takeaway for me was finishing up 1 month and starting another month here, and obviously the live cattle and the feeder cattle complex. Now, to kind of go off what Darin said about the equity markets, when you look at some of these monthly charts, as far as the monthly charts go on the equities, some of those put in some bearish moves here as far as we finished up here the end of July and starting August. So that also does trickle into this feeder cattle index. I could use the horseshoe and hand grenade proximity, as some folks would call it out there in the industry. We did not quite make a bearish reversal on feeder cattle, but we could have been close enough to call it a bearish reversal on feeder cattle for the month of July as we finished up that month. So that kind of had me on the edge of my chair and kind of had a feeling that the other shoe was going to drop on this cattle complex. Not only that, but the sentiment out there in the country on cattle was off the charts bullish, and that doesn't always bode well at the end of the day.
Well, in reality, though, as we look at a Friday trade number, we didn't finish as bad as we started the trading day.
Yeah, that's correct. As far as cattle go, the feeders, we had an $8 range here. The live cattle had a $4 range here. And there was something very, very interesting that I noticed as we made this drop today in both feeders and live cattle. The harder we dropped, the more the commercial stepped in here and looks like they took on some coverage. And what I mean by that is they bought August, sold October. They bought October, sold December. They bought December, sold February. So you saw some commercial step in here and own the live cattle complex, even in the face of steady to slightly weaker cash, where cash was about 195 to 196, so some light 197s traded here in the north. Most of the south was 187 to 189. Some of those 189s were kind of program cattle. Feeder cattle, same type of situation. There is some discrepancy yet. I don't know what the final index number is going to be today because the CME is still working on getting some of those big video sales here in it. But as those feeder cattle dropped, the harder they dropped, the more the commercial stepped in here and looked like they took some coverage out there by buying the August, selling September, buying September, selling October, and so on and so forth. So as this thing was dropping off and it looked like the world was coming to an end, I kind of had a feeling we were going to have a bounce back here towards the end of the session.
Algorithms, are they good or bad for this cattle market right now?
Take your pick. They're great when it's going up, but when it's going down, everybody hates them. So it was a lot of sell stopping as this thing started breaking and taking out the previous week's lows. Then we started to see a new wave of selling coming in. Once we started taking out some moving averages, some more waves of selling came in. And once we started taking out multi-month lows, then we saw some more droves of selling come in here. So interesting to note that on yesterday's session, we don't know today's session yet, but on yesterday's session, we saw a little over 27,000 feeder cattle contracts trade, and that'd be about double what we normally see in a daily session. And the open interest actually went up, so there was new sellers in the feeder complex. On the live cattle side of thing, A little over 90,000 contracts traded. We saw open interest go down 2,700 contracts. So it looked like the funds were getting out of their live cattle and they were adding to their shorts and feeders yesterday.
Darin, I saw you kind of agreeing and laughing a little bit when I asked about that. What about the algos from a perspective of this grain complex?
I think you got to watch some 20-day EMAs really, really closely. I mean, last week you had one close above the 20-day EMA that we've had in quite some time. That was Thursday, but you needed 2 days above it, and you didn't get it last Friday. On the 4-hour short-term weekly looks, you're maybe seeing a glimmer of hope here. But again, I think, does a 1 day create the end-all, be-all, this trend and this momentum shift? Probably not. And like going back to what Kyle was saying about the cattle complex, I mean, the technicals and momentum are starting to roll over here on the 4-hour and daily looks of feeders and fats. And then if you look at seasonalities are still a little bit more bearish here for the next month or so. So, yeah, I mean, I think there's a lot of fear in the global macro scheme of things here. That does the funds really want to cover corn shorts or bean shorts, wheat shorts in a massive way? If the USDA comes out on the 12th and says, you know what, maybe we got a 181 plus type of yield, maybe a 52 plus on beans. I think that's a really hard spot to beat. Say, hey, we're just going to buy a bunch of corn, buy corn, or beans, buy the beans. I think that it has to be a demand-driven story, or a story about the USDA lowering some type of carry-out or stocks-use ratios.
So then, Darin, since you brought up this report coming out on the 12th, we're starting to get trickle numbers. We had numbers come in from StoneX midweek this week. We know there'll be more entities releasing their acreage potentials. How much do you see that weighing in, or should it be weighing into this trade action?
It's probably already weighing in. I mean, you got to look at it from, is it priced in at this point? I think that I've been very vocal on it. I think this crop is a very good one. There are some yields out there, or some estimates, or 182, 183. It could be. I mean, this crop is good. I just don't know how good it is. I mean, it's good, but to the point we got to finish it. If it's realized and China comes back, maybe we have some glimmers of hope here. But technically, the momentum, the trend are still into the bearish camp here, sadly. But again, we're just needing some sort of, morale boost here, because that's really where this is at. I mean, the morale has been the lowest we've seen in probably the last decade.
Kyle, we're a week and a half, 2 weeks away from the start of the Crop Progress Tour. And I know you and I've had this discussion in past years. The markets kind of weigh a lot on that data, but should they be?
I don't know. To me, it's just a beauty contest. I mean, I can go out there and pick some random ears and come up with some yields myself, and just go drive over to my folks' place in Western Iowa and be like, oh, yep, here's what the yield is. And yep, post it on social media, and boom, there's my crop tour. I mean, basically that's what it is. But to go back off of Darin's point, the question is, what would bring them in here to cover a bunch of these short positions they have, when you've got a corn market that's sitting here with the amount of carry that it has in it? The commercials are sitting there on their laurels saying, you know what, we don't really need to buy anything or really take any coverage here, because we're pretty comfortable with our demand side right now. And as you said, China's probably going to come back, and China probably will come back and buy a few beans or buy some corn, because they typically do that towards harvest. They come in and they start buying some stuff, but that's normal business. But when you're sitting here in the bean market and that carry just kind of keeps widening out, the commercials are more comfortable with the size of crop that we have coming on. So there's really no incentive for these non-commercials to cover their shorts right now, because there's no problem out there. They don't see a fundamental issue with this crop, because the commercials are saying, you know what, there's plenty of grain out there, and with our demand situation, we're happy with where we are. We don't need to chase this thing. And the first place we'd see it, probably going to be some basis moves against that December, and then it's probably going to be the spreads moving. And right now, the basis really isn't improving out there, because they know the crop's out there, or for them, the crop is out there, the commercials.
So are the feeders banking on some cheaper numbers?
Let me say this, talking to some ethanol plants that I work with in the north here, and even on further north, cheap feed does not make for a profitable cattle operation. And what I fear is going to happen is we're going to make some big cattle out of this thing, because I can name 3 ethanol plants right off the top of my head that can say that are saying, hey, $5 a ton for DDGs and wet cake, come get it. It's piling up. You know what? Just come get it. I don't care. Just come get it. We don't want this stuff around here anymore. It's piled up. And so that tells me, with the replacement cost of feeders right now, with what it's costing to put feeders back in the yard, some of these cattle are going to get fed a little bit high. They're going to get fed a lot bigger, and they're going to be on feed a little bit longer.
Darin, what are your thoughts?
100% agree with what Kyle's saying there, and I think that's some of the concern I have for cattle. I mean, if you look at all the markets around right now, what market has been the most strong? It's been cattle, and I think cattle is one of the last shoes to drop here in the ag space, and then not just ag, you could equities, whatever. If the concern about the consumer is real, which is definitely real in the job data today, we only had about 350,000 increase in part-time jobs. Why are we increasing part-time jobs? Lower classes in a depression, middle classes in a recession, and the higher income earners are slowing down. There's a definite concern in the U.S. economy and the consumer. I think they're not buying the steak. They're switching and buying more beef, like hamburger type stuff, and we're shipping off that quality beef from an export standpoint. But the cattle are the last shoe to drop here, and I would be very concerned. Exactly what Kyle said. He is spot on here. Cheap feed, not necessarily conducive for longer-term cattle prices, in my opinion. Even though the fundamentals today are friendly, I'm concerned about the longer picture here, especially if the economy goes any weaker than we already are.
A few have said that, and either one of you can weigh in on this, or both of you, that we're not as heavily sold on the new crops in corn and beans as we should be at this point of the trading game.
Yeah, I mean, the average Brazilian, the U.S. producer has been behind the 8 ball this year on sales. But it's the market we've been in. We've seen this in 14, coming off of 12 and 13. You're seeing it in 22, 23, and now in 24. So really, I think there's, everyone knows this story. It's really a doom and gloom story right now. It doesn't feel good, and there's tremendous financial pain. There will be some brighter days ahead, but rallies for right now are selling opportunities in this environment.
All right, as we get ready to wrap this up, Kyle, go ahead.
Yeah, and going off what Darin said too, yes, it is doom and gloom right now, and coming off of some of those years, like he said, 2012, 13 into 14. After that, we had set ourselves up into some trading ranges. Whether now are we going to get ourselves into another trading range? Is that going to be from, I don't know, 350 to 450? Is it going to be 330 to 430? Or is it going to be 4 to 5? I don't know what that's going to be. If we find a bottom in here, corn has a habit of trading sideways for long periods of time, and that could be what we're getting ourselves set up for here once we find this bottom. And historically, we put in a fall low sometime between the middle of August and the middle of September. An early fall low could potentially be forming here. I don't know when that's going to be, but I mean, that's historically that's what it tells us, because we built most of the bearishness in. We know the size of the crop, and what left of the bearish news is there left to trade.
All right, gentlemen, thank you so much for both joining us. Our time is up for today. A quick reminder, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that has been the Nebraska Soybean Board Weekly Market Roundup.